0% interest, buy now and pay later. Is there any hidden cost behind it?
There's nothing called 0% or free lunches in this world. Like when they say 0%, there's a big cost involved, and that is a purchase itself.
Today we have with us Mr. Devang Agrawal, founder of Mind Your Savings. He helps individuals and families understand their home loans, manage debt, smarter financial decisions. And is there a different debt strategy that we bring in with this new year?
So from responsible borrowing, we have come to the age where people are more indulged in impulsive borrowing. But now, right from your mobile phone till your appliances, everything is being taken on loan. There is a major shift which needs to be addressed urgently.
So we've always heard mind your business. What is this term, mind your savings?
Mind your savings is all about managing your money well. How to invest it, how to make it grow.
What is one financial habit everyone must have?
People feel that since the money is easily available, that becomes a cause of worry as well, because the spending is being done very haphazardly nowadays.
So when it comes to EMI, which was considered a very bad thing, like a burden,
Correct.
if you can say, from our parents or grandparents.
That EMI is not a bad thing. So people always confuse that EMI is bad. Irresponsible borrowing is something which you should avoid.
Hello and welcome to EQMint's Finance Simplified. Today we have with us Mr. Devang Agrawal, founder of Mind Your Savings. He helps individuals and families understand their home loans, manage debt, smarter financial decisions. He has all the hacks to make your savings larger than you think. Hello Devang.
Hi Rashi.
Welcome to the podcast.
Thank you.
So our first question, right? So we've always heard mind your business. What is this term, mind your savings? Can you tell us about that?
So ideally what happens is, as we know, that mind your business is about just thinking and working out your own business plans. Mind your savings is all about managing your money well. So we all make money, but where we falter is we don't know how to manage it well, how to invest it, how to make it grow. So that is how I came up with this idea of starting Mind Your Savings, where I can educate and I can guide people on how they can make their money grow.
Correct. And does this come from this whole culture that we've been brought up in, that, savings is something that we must always, we've always in a society like that we have grown up in. Saving has been a very big part of our culture. Do you think this has come from there?
Yeah, it is very important. And what happens is that even in school, the formal educations that we take, this is a very important subject which hasn't been covered there. And even nowadays, all the professional services which are available, that is more about selling products. But when it comes to guiding and educating people about how to manage their money, how to manage their savings, so that is where people struggle. So that is how I came up with this.
So since we are just starting with the year 2026, and is there a different debt strategy that we bring in with this new year as compared to what it was 5 years ago?
So that I believe that there's a major shift in how the people borrowed debts earlier and how they are borrowing now. So from responsible borrowing, we have come to the age where people are more indulged in impulsive borrowing. So there was a time where people used to avail loans when they needed some to fund their necessities or emergencies, like buying a house, any medical emergency or something like that. But now, right from your mobile phone till your appliances, everything is being taken on loans. So yeah, there's a mindset shift. People feel that since the money is easily available, that becomes a cause of worry as well, because the spending is being done very haphazardly nowadays. So yeah, there is a major shift which needs to be addressed urgently.
So talking about, as you said, instant buying, or, this is an entire, I think it's a market change, right?
Yes.
Where people were earlier indulging in things very rarely. Whereas versus now, people are indulging more often. And of course, it comes with a price.
That is correct.
Right. So I think more and more making smarter financial decisions will definitely help everybody.
That is true.
Right. So let's talk about home loans, right? Like say across major cities in India, buying a home is a very big thing. So how does one get into this? To start off with, is renting a home a better option, or going on an EMI for that?
I think it all depends on your financial priorities. So, like, if I'm in a job that requires or demands a lot of travel, or a lot of relocations, or a lot of transfers, then obviously renting a house would make more sense, because I can't keep buying houses every day, right? Likewise, if I have any major expenses coming up, my financial roadmap is such where I have some major expenses coming up. So in that case, it would make more sense for me to invest in other financial assets like mutual funds or stocks to fund those expenses. So I would not want to block all my savings into one capital asset. So yes, that depends. Likewise, if I'm not facing any of these situations, then definitely buying a house make a lot of sense, because considering the property rates, like how they are increasing rapidly.
Correct.
Likewise, as I age, my capacity to borrow will also reduce, because my tenure that I can take will also reduce. So yes, so early the sooner. But in case if you feel that yes, you have other priorities which comes before house purchase, then you should consider that first.
Devang, I was actually watching a podcast of Anurag Kashyap, and he said that he shared an incident wherein he heard a friend, a producer director, who bought a house and with a hefty amount in his EMI.
Correct.
So he also mentioned that a lot of your lifestyle then it gets affected, and he swore that he's never going to go on EMI. What is your take on that?
So I think I have also seen his clip, and I believe that EMI is not a bad thing. So people always confuse that EMI is bad, loan is bad, you should just get rid of it. But irresponsible borrowing is something which you should avoid. So like if you want to buy a house, and if there's a facility that by availing home loans, you can buy a house today which otherwise you could have bought 10 years, 15 years later. So I think that is a very good thing. And as long as you're servicing the EMI, you're borrowing how much you can repay, I don't think so there's any problem with it.
So as you said, Devang, buying a home is, if you have an option to do it today, then why not?
Yes.
Right? Of course, because, you're capable to do it, then you would, do it, say, 10 years later.
Correct.
Right? Also coming back to the whole, getting a loan, and you said it's not a bad thing, which was considered a very bad thing, like a burden,
Correct.
if you can say, from our, our parents or grandparents' generation. And now people are, very easily taking personal loans, home loans, car loans, etc. Why do you think this shift has come, or what has influenced it?
I think I would attribute this thing to financial awareness. Like people don't know how to borrow. Like just because the option or the facilities available, you want to make purchases which is not needed right now. So I think that is one of the reasons why people are piling debts, and all these finance companies are also flourishing nowadays, because they are able to sell the products because people are ready to buy. They are willing to buy and splurge. So I think that is one of the reasons. If people have enough financial awareness, they have enough financial education, I think we can definitely control this habit or this
whole
this
situation,
pattern, this
this
entire
pattern.
pattern.
Yes, correct, absolutely. And can you tell us why does the principal in a home loan barely move in the first few years?
So that is how the amortization is designed. So bank has also very smartly designed their amortization schedule. So normally bank would want to earn their interest for sure, so they would definitely not compromise. But at the same time, they would not want to overburden borrowers also. So initially, just to ensure that their out-of-pocket expenses doesn't increase, EMI doesn't go high, they keep the principal component very less, and they take whatever interest they are entitled to. And as the years goes by, so the principal component increases and interest reduces as the principal is repaid. So yes, that is how the amortization is planned across banks.
Right. So say if I have a home loan of 20 years, how is there a way to reduce it to a smart way actually to reduce it to 12 years?
There are many ways by which you can do this. Like ideally, see, every year you have an increment, your income increases. But then what we do is that we also increase our expenses. We want to have enhanced lifestyle. But then what we avoid or what we neglect is your spending and savings. So that is something that we should be mindful of. So every time you get an increment, you get a bonus, you can pay partly towards your home loan. Even if you increase your home loan EMI by 10% every year, I'm sure you can cut down your tenure by half of what you have taken. So
That's actually a hack.
that's a very common hack. Like secondly, like bank keeps revising their margins and spread from time to time. So you should also keep looking out. Like if any bank is offering lower rates. So there are so many cases which I have found where people are unnecessarily paying high rates where the markets are offering much lower rates. But since they haven't studied enough, so they keep on paying that. So I think they should be doing it. There's something called smart home loan with the overdraft facility. So people have optimized this particular option to their benefit. So just by using and they're rolling their savings into this account, they can cut down their interest losses by 15 to 20% easily without making prepayments. So these are the options that people should be aware of, and that's why I said that financial education plays a very important role, because if you keep yourself updated, that's when you learn about all these aspects.
Absolutely. Yeah, that's the lovely way of putting it. So, coming back to this, 0% interest, or, this buy now and pay later. So this is a very trending thing, and people are like, just going all out with this. Is there any hidden cost behind it, or, what is your take on that?
See, I feel there's nothing called 0% of free lunches in this world. Like when they say 0%, there's a big cost involved, and that is a purchase itself. So if I want to buy a phone, if I get attracted to a phone, there's a new launch, I don't have money to buy it. But if I come across a scheme where I don't have to pay anything right now, I think I would be keen on taking it. And after a month or two, you realize once you start paying in the form of EMI that purchase was not required. So the actual cost is that purchase itself. Because you did not need it at that time, but just because the offer or the scheme was available, you took it. So I think you should have some control over your spending habits there.
So that entire amount that you paid for your phone is the hidden cost.
That is correct. And the proof is the companies, the facilities itself. You can see all the finance companies flourishing these days. So what is the reason the loan business is increasing? It is just because of our irresponsible behavior of borrowing and buying.
Correct. And talking about people in the higher income bracket, say a top level executive, why do we still see them living paycheck to paycheck?
That is because I feel everyone goes through some change in or shift in the financial situation every year. They have increments, they get promotions, they switch jobs, the income increases. But when the income increases, we also see shift in the lifestyle enhancement. The lifestyle also increase, but the saving rate does not increase at the same pace. So I think that is one of the reasons wherein if your income increase, we always encourage that you should save more, you should invest more, so that you can feel more secure, you can be more financially free early on. But then their expenses go up, their lifestyle has to be improved, and so on. And instead of securities, the insecurities grow. So yeah, that is the reason.
That's a lovely way to put that, securities versus insecurities. So again, is it okay to give guarantee to somebody else's loan?
If you feel, or if you're capable of repaying that loan if the other person fails to. Right? For example, we come across a lot of instances where you give loan or the guarantee to somebody else's loan. But due to some unavoidable circumstances, that person doesn't pay, right? So then it becomes your liability to pay that loan. And if you fail to pay, then obviously your CIBIL ratings goes for a toss. So if you feel that you would be able to service your friend's loan, only in that circumstances you should pay. I would also say that it is a good facility. Like I won't say that you should not help your friend or you should not step up when somebody is needed. But then what situation? I've seen cases where somebody wanted to buy a phone and they have given guarantee on the consumer loans. So that is not a good idea. But if somebody is buying a house, somebody is facing any medical crisis or something like that, in those situations you can give guarantee to them.
Okay, so again talking about loans, right? So what would you say? Where is the difference that we take loans from the banks versus we come to say mind your savings? What is the difference that we can expect?
So loan has become very vast nowadays. You can't just go to a bank and get the loan. There's a lot of process involved. There are a lot of products which has been introduced. There are a lot of bits and bits that the entire process involves. So we help our customers get through all those processes at ease. So when somebody comes to us with a requirement, we don't ask them how much loan you need. We just ask the requirement. What is your financial situation? How much money you save? What is your age? What is the tenure you're looking at? And we offer almost 20 to 25 banks under one umbrella. So which bank and which offer suits best to him? So we shortlist and we offer that option to our clients.
So that's again a nice way to make the individual understand how to manage their debts or their financial aspect of life.
Yes, I would also say that if somebody wants, like, they have to put a lot of time and effort into it. Like if you're buying a house, you want a loan, right? So you would like just going to 10, 15 banks and inquiring requires a lot of time and effort. So we do that job for you. Plus, there are so many offers that they have, so many products they offer, right? Understanding becomes a very tedious process for you. So we help you or shortlist the right thing based on your particular financial situation.
Right. As they say, there's so much knowledge out there in terms
Yes.
of offers, and every bank is offering something or the other. There's so much confusion at the
Correct.
consumer's mind. I think you are the go-to person for that, right?
is
To
true.
clear that
That
confusion.
is true.
And so what is your vision behind Mind Your Savings, if I can ask?
So when I started this company, I think what I had in mind is I want to see everybody, at least in India, starting India, spreading out to the world. I want to see everybody financially free. And I see this goal very practical and very much doable, because there are ways and very easy ways and methods by which we can achieve this goal at ease, just by starting early. So when you start earning at the age of 20, 21, like just imagine if you start investing right from the first paycheck, you invest regularly, you invest with discipline. I'm sure by the time you're 50, you can very much achieve financial independence.
Correct. Absolutely. Because then you have
Yes,
then you have
because
something.
compounding factor plays a very important role
Right.
there. And when such basic financial education is available, then definitely this goal is achievable at ease.
So, as you said, we must start early. So, what is the starting point? So, because we have a lot of our viewers who are young entrepreneurs and founders who have already invested a lot in making their business, but of course they might have a certain bit kept aside for savings. So, which is the right place for them to invest this?
I think the best time to start investing when you get the first pocket money. I would not say when you start earning, because you may not be investing a lot. You can get into a habit of saving when you get your first pocket money. That could be a very small amount, maybe 100, 200, 500 rupees, whatever money you get. And once you start earning, then once you are in the habit of savings, then you should start investing in mutual funds, and at least basic SIPs you can start. So that is how you can go about it.
Right. So, and if you had one advice to all our viewers of one financial habit everyone must have, what would that be?
Always invest before you spend.
Okay.
So we always have a habit that whatever money we earn, we spend it. Whatever is left, then we invest. But what I would advise to all my viewers is, like, if you're earning a particular amount, you should calculate as to how much money do you require in the future for a particular goal. So just goal-based investing is what always works for everybody. If you want to buy a car after 3 years, you know that the car that you're looking forward to is going to cost you X amount of money. So how much money you would require back then, like after 3 years. So based on that, you should invest accordingly before you spend, and that's how you should practice for all other goals.
Makes sense. Okay, so I have a few rapid fire questions if you're up for it.
Yes.
Where we would, these are questions which are most often, people are looking for answers to. So, shall we start?
Yes.
So, is it the right time to take a home loan, with the interest rates still elevated in the market?
I would say interest rate is at the all-time low right now. So I'm sure like buying a house is a very affordable thing right now. So people should look forward to it. And you can also see transactions going up, like if you check news. But one tip which I would like to give is that the best time to avail a home loan is when the market rate is at peak. That is because that is a time the bank offers you the lowest margin. And once you get the margin, that is locked for life of the loan. And once the repo rates start dropping, that is the time you reach the lowest point of your home loan rate. or whatever loan you are availing, the loan rate remains the minimum. So I think even if you are borrowing now, when the market rates are very low, the margins are high, once the market rates are at peak, the repo rate is at peak, that is the time you should switch to the best deal available in the market, and then you can just sit on it and enjoy.
Should you prepay your home loan or invest the surplus money instead?
Home loan is available at 7.5 to 8% on average, whereas if you just invest in index fund also, it gives you a return of 12 to 15%. So I think the answer is hidden in this particular statement also.
So is a longer tenure a smarter or a harmful financial?
So no borrower should keep their obligation very high. Just assume that if you keep your obligation very high, in case if some financial crisis strike and you want to lower your EMI or lower your expense, bank will not allow you to do that. Let's say for example you lose your job, right? If you lose your job, no bank will give you loan, and existing bank will also not allow you to lower the EMI. So that is the time the lower expense will help. Like alternatively, even if everything is going fine, if you keep your obligation low, home loan is very economical, and whatever surplus you are left with, you can increase your savings and investments. So that will help you build much more, much bigger asset otherwise.
Correct. Floating versus fixed home loan rates, is it a better long-term decision?
I think fixed rate is completely phased out now. I won't favor it that much. There was a time when there was a prepayment penalties and all that. But now what happens is, even if you go for a floating rate, the market rate reduces, you can always switch the loan at zero cost. So I would say that floating rate works better. Alternatively, what happens is if you go for a fixed rate, there's also restrictions on you. Like you cannot make prepayments, you cannot switch loan to a better deal. Whenever you do that, bank can charge you penalty. So it's always good to go with the option which offers you more flexibility. So floating rates work better these days.
Is owning a house more of a financial decision or an emotional one?
Okay, to me it is more of an emotional decision because that's how family decides. So even sometimes it so happens that my finances may not permit me to, make a particular purchase, but just because my family is happy, I feel that can provide them a much higher standard of living. So I may stretch and buy it. So I think we still look at it as emotional decision.
Right.
If that's a house we are going to stay in. Otherwise, if you're going to buy a second house or third house for investment, then I think that should be a financial decision.
Correct. It all comes back to the
Yes.
dream home concept of this thing. And how much EMI is safe as a percentage of your monthly income?
Anything more than 50 should not be okay. Like you should keep your EMIs restricted to 50. 30% can be your discretionary expenses and 20% minimum should be your savings. So 50 should be the ideal ratio, 50%.
Is top-up home loan debt good leverage or a financial trap?
It depends why you are borrowing. Again, if you're borrowing to fund your vacation, to any phone or anything that you don't need, it is a burden for you. Likewise, if you are availing top-up loans for closing your other expensive loans, it can be a financial boon. And yes, a lot of people also avail top-up loans to invest. Though banks don't permit it, but people do that. So what you're doing with the money is more important rather than tagging the activity good or bad.
Right. Yeah. Do you think Indians are over-leveraged when it comes to EMIs, or loans?
The trend that we are moving towards, they are getting over-leveraged because as we discussed earlier, since the facility is available, they want to have everything that they dream of rather than what they need. So yes, they are getting over-leveraged these days.
And just to close this, is the credit score obsession helping or pushing borrowers towards unnecessary debt?
Ideally, it should not push borrowers for availing loans just to improve their score. Even if you have a card, just a credit card can also help you build your credit score. So like when you have there are two kind of situations here. Like you have a secured borrowing, you have unsecured borrowing. So secured borrowing does help you build your credit score, but unsecured borrowing helps even more. That is because there's no intention of repaying the debt. Like if you have a house, you take a loan against your house. Obviously, you would not want to lose a house, so you would repay the loan. But when you take a personal loan and then you repay the loans on time, that exhibits your intent that this is a good borrower, and that definitely tag you as a good behavior.
Lovely. So before we end today's podcast, do you have anything to say to our audience that will help them live a better financial life?
So I would just give 3 advices to people, like just start your investment as soon as possible. Your first investment should come from your first paycheck. Second, you should always invest before you spend. And third, you should indulge in value investing rather than short-term investing and withdrawing and breaking your investments. So that is, I want to keep it simple for now, and the financial situation defines how they want to take things forward. Thank you.
Lovely, Devang. Thank you for joining us and giving us such insightful advice on how one can manage their finances and live a much stress-free life.
Thank you so much, Rashi. It was nice.
Thank you, audience, for being with us today. Until next time, mind your savings. This is EQMint's Finance Simplified.